Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and the senior portfolio manager at McNichol & Associates Asset Management. This is the first FANG Friday of the new year, and on behalf of us all at Strategic Analysis Corporation, I trust that you all had a wonderful holiday season. I have to add that I think that 2023 has been a happy year for our FANG Friday viewers, even if it has been a bit tricky to navigate. Second, turning to the FANGs themselves, I should observe that presidential election years tend to be bullish for the stock market. Given what it is looking to me very much like strong support from the U.S. Federal Reserve Board in terms of de-risking the economy and the stock market, I expect that stock market prices in general will be rising, and prices and valuations for the FANGs specifically will be largely, but probably not entirely, going along for the ride, despite some pretty aggressive valuations for this group. Third, for those of you who tuned in to my Deep Value webinar last week, I trust that you enjoyed doing a deep dive into the murky waters of what we call the blue zone. Finally, when I come to the summary section today, I'm going to introduce you to a very powerful feature of SVA that you might want to consider given the historically extreme valuations in evidence in today's market. But right now, we really need to take a close look at those FANGs and what's been going on. But as always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start with Amazon, and Amazon has been just drifting along. It's a bubble price there above. By the way, if it just stays there, given the return on equity, the ROE of the company of about 18%, then if it can hang in there, the bubble price should be rising at about that rate too. So that by itself might give an investor a decent return. Alphabet, same story, has been now, after a confirmed buy signal a little while ago here, has been drifting along its MSG price. That's 5.5 times book value. I would like to think that it can get up to its bubble price, but if it just continues to drift along that MSG price, that could be a gain of somewhere in the order of 15 to 20%. So not all bad. By the way, one thing that I had meant to do was draw your attention to the difference between the current price and its fair market value. So you can see that although Alphabet is just modestly above there by about some 20%, nonetheless the stock is above its own fair market value. Meta, again, the same thing as the first two, has been just drifting along its MSG price. That's 5.5 times book value. It's been kind of picking up very, very recently, so perhaps that is reason for optimism going into the year. Microsoft, I think we had decided that, I had decided that I would sort of put a kind of buy on the stock, at least a good buy hold on the stock, and it's been rising ever since. Although fairly recently it had been just drifting sideways, but it may now be breaking out. HB2, which is 12 times book value, should be coming in sight. Whether it can get above that, of course, another question. Again, look at the gap between the price and the fair market value. That is a gap of some 47%. NVIDIA, after kind of drifting sideways for some while, has actually broken out and looks as if it's heading nicely for its HB6. And the question, of course, is going to be whether it can actually break out above that HB6. Remember, in times past, I showed you the long history of NVIDIA, and the HB6 was a valuation high for the company going back to the year 2000. Now, the fair market value has been picking up nicely, and hopefully that we're going to see some very, very nice numbers on the next report in February. I do, again, draw your attention to the gap, however, between the price and the fair market value. That's some 51% lower than the current price. Netflix, well, you remember back in 2022 when the stock got down to its super growth price, I said, look, stocks like this inevitably seem to rise back to their bubble price, and the stock did. It set back and then broke out again, and I thought, ooh, that's a little bit on the expensive side. So we had a confirmed buy, then we had a confirmed sell, and now we've got another confirmed buy. If you want some question marks over a stock, this is one of them. However, their most recent earnings and sales numbers were excellent, and the next ones are coming up just about the end of January, and it'll be interesting to see whether that momentum carries on, in which case, well, the HB2, or HB1 rather, would certainly come into play, but maybe something beyond that. However, we're going to take it a step at a time. Now, that's the good news. The kind of the indifferent news among the FANG starts with Apple, and its fair market value has been literally going almost nowhere for a long period of time. And again, when we see the current price and the fair market value, the price would have to fall some 50% to get to its own fair market value. With no growth and no growth in sight, the question is this stock going to be able to hold in? Well, we'll see. And finally, Tesla. And look at the trend of the fair market value here. It's falling. It very much appears as if the fundamentals of the electric vehicle market are in some disarray. And I have to note, by the way, that today I was just looking at the price of Tesla, and it's actually broken its HB2 price. That's 12 times book. So it may be in the process of rendering us a sell signal. So, to briefly summarize what happened last week, my summary this week is actually quick and easy. 5 of the 7 of the so-called Magnificent 7 stocks in general have been oozing higher. Not soaring, but oozing higher. And given those recent promising words from the Fed about not 1, not 2, but possibly 3 rate cuts in 2024, some of the risks in the market may have been at least modestly alleviated, despite this week's apparent setback in the inflation rate trend. As we just saw from the SVA charts, the FANGs are more or less holding to rising, moderately rising modality. Amazon, Alphabet, and Meta, notably, all look to be heading higher and are coming off strong valuation support levels. Microsoft and NVIDIA are breaking out of weak sideways trends. And finally, Netflix looks to be gathering its forces for its late January report, which hopefully will show continued favorable strong earnings and sales trends. However, we do not have a clean sweep of the FANGs. Apple and Tesla continue to be a major concern because of both their shorter and longer-term potential growth outlook. Apple has shown no growth for several quarters now, and as we saw today, its fair market value measure is full 50% lower than the current price. As far as Tesla is concerned, the electric vehicle market is looking a whole lot like the mid-1920s, when everybody and his brother decided to build an automobile, which led to the catastrophic consolidation in the industry. In my final December 2023 FANG Friday podcast, I admit to sort of fluffing off the risks in Apple and Tesla when I said that they were likely to be pulled along with the FANGs in general and the Magnificent Seven in particular. Since then, both stocks have been weak and are looking more and more as if they may be confirming their actual visible fundamentals, rather than the dreams that I still see analysts trying to propagate. No outright sell signal yet, however, although Tesla may be on the verge. At this juncture, I would like to have you keep in mind a very powerful feature of SVA. Our fair market value measures, that dotted line on the chart, they are measures of central tendency. That means that they will tend to draw prices to, and by the way, usually below those fair market value measures when things go awry with the growth outlook for a particular stock. When we have long periods in which a given stock valuation rises further and further and further above its fair market value measures, sort of opening up like so, I've nicknamed that kind of market formation the jaws of death. In my long experience with SVA, eventually that gap is always closed, needless to say, not to the benefit of shareholders. The precise timing can never be predicted, of course, but one very sound reason to keep tuning in to FANG Friday is that you can see that gap in almost every one of the FANGs. Old hands among you will recall that in the past I saw this gap in Netflix and Meta, and we avoided 70% plus drawdowns in both stocks when we received sell signals from each. If history serves us, there are more to come amongst the FANGs, and more to come in many, many other growth stocks beyond the FANGs. There's no need, I think, for any undue alarm right today. But look it, our SVA service will save our own clients untold grief and can do the same for you. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNicholl & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.